Today we will be doing a sum on pro rata allotment of shares. This is a problem which came in the ISC examination 2019. So let us quickly go through the sum before we solve it. Mira and Company invited applications for 50,000 equity shares of rupees 10 each at a premium of rupees 2 per share, payable as on application. The application money was asked for on 1st May 2017, amount being 2 rupees. On allotment was due on 1st July 2017, rupees 5. So 2 rupees is premium and 3 rupees goes towards capital. On first and final call, which was due on 1st October 2017, rupees 5 per share. The company received applications for 62,500 shares. So the company had invited applications only for 50,000 shares, whereas they received applications for 62,500 shares, which means they received applications for 12,500 extra shares. So what does the company do? Let us see. It was decided to refuse allotment to the applicants of 2,500 shares. So when the company refuses allotment to the applicants, what does the company do? The company refunds that money to those applicants. Allot in full to applicants of 10,000 shares and allot the balance of the shares applied on pro rata basis among other applicants. Utilize the excess application money in part payment of allotment money. Charge interest on calls in arrear, if any, at the rate of 10% per annum. All the money due was received except from one shareholder to whom 200 shares had been allotted. The amount was due by him to the company even till the date of the balance sheet, which was 31st March 2018. The company charged interest on calls and arrears from the shareholders from the date on which it was due till the date of the balance sheet. You are required to prepare the journal, give the journal entries, as well as you have to prepare the cash book. Unfortunately, it's not printed in the sum, so I'm writing it for you. Journal entries and cash book. Now, what have we learned earlier? When we don't make all the entries in the journal, when we are using the cash book, we only show the bank column of the cash book, and all cash and bank transactions go to the cash book, and the other transactions are recorded in the journal. So keeping that in mind, let us start working out the sum. Now, Journal of Mira and Company, Mira Limited rather, as I have always told you, format and narration is compulsory. Because I am solving the sum without the proper journal format and narration, I would like to emphasize on this that for any examination, the format and narration is absolutely compulsory. So let us see what happens in the first stage. That is application. On 1st May 2017, 2 rupees is being asked for on application, and the company receives application on 62,500 shares. So 62,500 shares into 2 rupees per share is what it will receive on application. Everyone is clear on that? Okay. So here we have 62,500 into 2, which is 1,25,000. Now, since we are preparing both cash book and journal, when we receive money on application, we have to record it in the cash book. So, in the cash book, to share application account, 1,25,000. Now, let us make the next entry in the journal. Now, we are transferring the money to share capital as well as to share allotment. Now, before we do that, we have to see that the company had refused allotment to the applicants of 2,500 shares. So 2,500 into 2, that is 5,000 rupees, needs to be refunded. So what will your journal entry be? Money is going out of the bank. So credit bank account. Which account will you debit? Share application account. Now, since it's money going out through the bank, we have to show it in the cash book. So buy share application account, 5,000 rupees. So how much are we left with? 1,20,000. We received 1,25,000. That is, the company received 1,25,000. They have refunded 5,000. So the company is now left with 1,20,000. Now we are making the transfer entry in the journal. Share application account debit 1,20,000. I hope all of you have understood this. 1,25,000 was received, 5,000 was refunded, 2,500 shares into 2 rupees per share. So now the company is left with 1,20,000. To share application account, how many shares does the company have? Rather, it has invited applications for 50,000 shares into 2 rupees per share. Only 1 lakh can be transferred to share capital. Here you can see 2 rupees per share, 50,000 share. So the 20,000 extra that has been received is transferred to share allotment account. It is a sum on pro rata. So we are transferring the excess amount received on application to share allotment. So we have finished the application stage. Let us move on to the allotment stage. Allotment stage onwards, we first make the transfer entry, and that is, we make the money due, and then we make the entry for receiving the money. So let us see how much is the company expecting on allotment. On allotment, on 50,000 shares, 5 rupees per share is being expected. So share allotment account debit 50,000 into 5 rupees, which is inclusive of 2 rupees premium, 2,50,000. How much can the company now transfer to share capital? 50,000 shares into 3 rupees per share, that is 1,50,000. And securities premium reserve, there is a spelling error. Students, please note, remove 1 R from here. RESERVE. 50,000 into 2 rupees per share. So that is 1 lakh. Now the amount has been made due. So allotment money due on 50,000 shares at the rate of rupees 5 per share. Now we will move on to the next part of allotment and see all the money due was received except from one shareholder to whom 200 shares had been allotted in full. So 200, it's not pro rata, so you don't have to worry about any difficulty in calculation of calls in arrear. So straight jacket sum, 200 shares allotted in full. Hence, how much will the calls in arrear be? 200 shares, 5 rupees is being asked on allotment. So, calls in arrear is 200 into 5, that is 1000. Now, normally the entry that we make on allotment when we don't prepare the cash book is bank account debit. This is just to explain it to you. Calls in arrear account debit to share allotment account. This is the entry that we make. So if calls in arrear is 1000 debit and you are crediting share allotment account with rupees 2,50,000, just have a look at this. Where will your problem arise? Why should we not credit share allotment with 2,50,000? Because we have already received and credited 20,000 extra at the application stage, which we have transferred to allotment. Hence, we cannot transfer 2,50,000 over here. How much will we transfer? We will only transfer rupees 2,30,000. I hope this is clear to all of you. 2,30,000. Now let me go back and show you this. To share allotment account 2,30,000. To share allotment account here 20. So total allotment account credited with 2,50,000. Now if you are not receiving 1,000 rupees, then how much money has come into the bank on allotment? 2,29,000. This would be the entry that you would normally make if you were not making the cash book, showing the cash and bank transactions separately and the other transactions in the journal. Then this would have, if you had only made journal, this would have been the entry. Now, since we are making the cash book, we must transfer the bank transaction into the cash book and the other transaction into our journal. So, if we break this, bank account debit to share allotment account 2,29,000. So in the cash book we have written 2,29,000. What will the second journal entry be? Here when we break up, calls in arrear account debit to share allotment account 1,000. So this entry should go to the journal calls in arrear account debit to share allotment account 1,000. Now we will move on to the share first and final call. First and final call was made on 1st October, and how much money is being asked for? 5 rupees per share. So how many shares are there? 50,000 shares. 5 rupees per share will be 2,50,000. So let us make the transfer entry in the journal. Share first and final call account debit to share capital account 2,50,000. And just like before, how many shares has the company not received the money? The same shares on which allotment money was not paid, so 200 shares. And here also on first and final call, company is asking for 5 rupees per share. So calls in arrear to share first and final call is 1,000. So 2,50,000 minus 1,000, company is going to receive 2,49,000. So bank account debit to share first and final call account 2,49,000. thousand. Without the cash book, what would the entry be? Bank account debit 2,49,000. Calls in arrear account debit 1,000. To share first and final call account 2,50,000. Okay, I hope all of you have been able to understand this concept. Please remember that do not omit this calls in arrear entry and write the figures directly. It is important to show calls in arrear entry. Now the last leg of the sum. What does this say? The company charged interest on calls in arrear from the shareholders from the date on which it was due till the balance sheet date. So 10% is calls in arrear. Company is charging 10%. When was the first 1,000 shares due? From 1st July. On allotment, a shareholder holding 200 shares did not pay. So interest has to be paid till the date of balance sheet, which is 31st March 2018. So from 1st July 2017 to 31st March 2018, interest has to be paid on the first 1,000 rupees. I am calculating interest on calls in arrear. So the amount that was in arrear on allotment was due on 1st July 2017. It is 1,000 rupees. Till the balance sheet date, 31st March 2018, money was not paid on this call. So how much interest will have to be paid? At the rate of 10% for how many months? From 1st July to 31st March. So July, August, September, October, November, December, January, February, March, till the end of March. That makes it 9 months into 9 by 12. If you work this out, then it should work out to rupees 75. All right. Now the next calls in arrear was at the first call stage. First and final call was made on 1st October 2017. So on the next 1,000, interest will have to be paid from, let us go back to the date, 1st October 2017. 1st October 2017 to 31st March 2018, balance sheet date, October, November, December, January, February, March. So at the rate of 10% for 6 months. If you calculate the interest here, how much does it work out to? It works out to rupees 50. Calculate yourself and see whether the calculation is correct or not. Now, total interest on calls in arrear that will be charged is 75 plus 50, 125. I hope all of you have been able to understand the calculation. Now let us make the entry for interest. First we will have to debit shareholders account. So shareholders, or you can write sundry members. Both are acceptable. Sundry members account debit, to interest on calls in arrear, 125 rupees. Then we will close interest on calls in arrear by transferring it to statement of PL. So interest on calls in arrear account debit to statement of PL 125. Thank you, students. I hope you have been able to understand the sum. We will proceed to further sums on pro rata in my next video.